What's going on, guys? Hope you guys have an amazing day so far. And I just want to make a quick video on how I approach non-farm payroll Friday. I will do a top-down analysis from higher time frame to lower time frame, so you can see how I figure out my daily bias and narratives. And I hope this will help you trading. And let's get into it. We're currently in daily. If we see at this week, it's a bearish week. Monday, Tuesday, Wednesday creates a small consolidation. Thursday retraces back to fair value gap, daily fair value gap, and continues going down, taking out this sell side liquidity out. So Friday, it can do either two things. It can go back up, touch this daily bearish order block, or it can continue going down. And we can see there's a daily fair value gap over here. So it can continue going down, touch the daily fair value gap, or even lower, we see there's a daily volume imbalance right there. So we can approach this and then fully rebalance this volume imbalance. If it continues keep going down, our next objective will be daily sell side liquidity, which is right here. So yeah, we have our buys in place, and it is really a 50-50 day. So we will see how the market reacts. So we'll go to 4 hour. We see this is our daily bearish order block, and we see there are clearly a 4 hour breaker right here. So it's a high, it's a higher high, and a lower low, lower than this low. So it's a bearish breaker. If we hide this, we can mark out the last bearish candle before it starts going down and take out the buy side liquidity. It will be something like this. So what we want to see is the market do something like this. It goes down and retraces back up to this range, bearish candle range, and then continue selling down, approach this daily fair value gap. If it do something like this, if it goes up and completely violate this range, continues going up, then our buys might be bullish until the market hit this daily bearish order block. So we'll see how the market reacts. We can also see in the weekly, we can see there are two. So this is the daily fair value gap. We can see there are two weekly volume imbalance right here that the market will likely to retrace to. I'll mark up this one, which is the lower one. And we can go to a daily. So the market can either goes down or goes up and touch the daily bearish order block. So we'll go to 1 hour, and we mark out the midnight new opening time. Okay, so we can see the market completely goes down. If we remark the daily fair value gap, you can see it already touched the daily fair value gap. We want to see how market reacts right here. So we will mark out the midnight new opening price to figure out the power 3. If we drop down to 15 minutes and we go to new opening time. So I only trade New York session. So all the London session, I will skip it, and it will just go into my analysis. So going to 8:30, we can see the market is trending up. And remember this level, this is the 4 hour bearish breaker. So as I said before, I want to see like it retraces back to this level and continues going down. If it just violate this level, it goes up, our buys might be bullish. So, and remember one thing, that 8:30 is the non-farm payroll news hit. So it will likely to create a whipsaw on both sides to clear both sides out. We won't participate in this, so we will just wait by the sideline. We can see the market goes down at first and then create a fade move and go all the way back up. We will mark out New York opening time. We'll hide this level so it will be more clear. we can see the market from the midnight new opening time to new opening time is all in an uptrend. So the market is really in a premium, and new opening time the market continues going up, so it's largely in premium. So we can looking for sell for the market to retrace or reverse. The market goes to the 4-hour breaker level and it goes down, reacts well. And for my strategy right now, I only enter on breaker. So if there are no breaker set up, I will just wait by the sideline to filter out all the noise. Market kind of just consolidating right here. We'll mark it out next 9:30. It's crucial opening time. You can see there's a potential breaker right here, high, higher high, but I want to see this completely close above this level. So this in my book, it doesn't count as a breaker. I want to see it completely close above this level. So I'm continue seeing there's no setup, at least for breaker setup. It's 9:30. Market goes down, and what I see is a large breaker setup, bearish breaker setup, high, higher high, lower low, in the last bearish candle before it starts going up, take out the buy side liquidity. So I'll mark it out. The market continues going down. I'll mark it out something like this. I'll hide this level so it make more clear. The market goes down and touch the weekly volume balance. For the volume balance, I want to see the market completely rebalance it. So our biases remain bearish right now. So remember the last bearish candle, I combined this one. So this range, if it goes back up, I was looking for sell. Okay, it goes back up. We can go to 1 minute. There's a small volume balance right here. Market retraces back to there. We enter in 10 o'clock New York morning session, bearish breaker, high, higher high, lower low, and break this level. Retrace back to 1 minute volume balance right here. Pre-free, power-free manipulation. We enter above the midnight new opening price for sell. So this can be a fake move manipulating and continues going down. Buy side liquidity taken on 3 minutes. Buy side liquidity taken. I know I'm on 1 minute, but it's the same thing. Market structure shift into bearish. Shift. This level is break from here. Break. Shift in bearish. Align with daily bias. We are targeting on fully rebalanced weekly volume balance right here. And targeting on 1 to 2 risk to reward. You can see how the market reacts. Kind of go up, consolidate a bit, goes up again. Look at how it respects this breaker range right here. And hit our target 1 to 2 risk to reward. So this is our first trade setup. I didn't take this trade in the market because it's a NFP day. So if it's an NFP day, I will only enter in the afternoon session. So this is morning session, but it can be an idea. Okay, so we go into the next one. Our next time will be 11. So after 11, I won't enter. From 11 to 1, it will be lunchtime, and I will just wait by the sideline because the market can create a lot of irrational move or consolidation. Remember, our time zone is always on New York time zone. So we'll see. The market continues going down. Kind of consolidate at this level. Goes up, take out the buy side liquidity. And we didn't really see any setup right here. It's a potential bearish breaker setup. But what I see is high, higher high, potential lower low. This low is lower than this low, but if you look closely, it didn't close below, the body didn't close below this level. So I will enter on this too. We want to see it completely close below this level to qualify as a breaker. So 1, we'll mark it out 1 to 11 to 1, and we'll just let the market plays out, and we will wait by sideline to do the analysis. Market goes up again. Remember what I said before is the 4-hour breaker. The market goes up and then continues going down, aligned with our narrative. It goes out again, likely to retouch again, drop down. Goes up again. Going to 1. Now our biases remain bearish. It's respecting the breaker, and then we want to see fully rebalance this weekly volume balance. So 1:30 can be a clear time to see how the market reacts in the afternoon session. So I'll mark it out. We can see there's a bearish breaker right now forming high, higher high, lower low, lower than this low. So we will mark out the level. Entering new afternoon session. 1 o'clock, around 1 o'clock, bearish breaker on 1 minute. High, higher high, lower low, lower than this low. Retrace back to 1 minute fair value gap. If you see closely, there's a 1 minute fair value gap right here. Retrace back to it. Taking out buy side liquidity on 1 minute. Taking out high, higher high. Taking out this buy side liquidity. Align with daily bias. Narrative, we want to see fully rebalance the weekly volume balance. So yeah. So the last bearish candle before it starts going down and take out the buy side liquidity, it will be this range. So if the market breaks, I want to see it retrace back to this range, and we were looking for sell. And the market hits our target 1 to 2 risk to reward, and what I would put my stop loss is 1.5 handle above this level, this range. But in this case, I add additional 1 handle because there's a small volume balance right here, so it will be like a buffer. So 4 plus 2.5 equals 6.5. So this is our second setup. Remember, I always enter on breaker right now. If it's not a breaker setup, I won't enter. Second try idea. And then see the market continues going down, even if rebalanced this weekly volume balance. It didn't like retrace or reverse, so we want to see, okay, now it probably will want to continue going down. Our next objective will be the daily volume balance, which is lower than that weekly volume balance. So the market might want to go fully rebalance this range. And it did. So we want to see, okay, did it want to retrace or reverse right now? Because the market already moves a whole lot. Without retracing, you know, the market moves in trend, it won't like do something like this. Yes, it's happened sometimes, but most of the time it will do something like this. It retrace, it goes down, and retrace, it goes down, and take out the buy side liquidity and goes down, do something like this. So right now we can see the market wants to have a retrace or reversal. And if there are a bullish breaker setup, we will look into enter. So right here we see a tiny bullish breaker setup, which is the setup I entered on Friday. So the market just cleared our objective. It fully rebalanced this daily volume balance, this range, and then it goes up and take out this market structure shift, break this level. And we see a bullish breaker, low, lower low, and higher high. So if the market goes back to the last bullish candle before it starts going taking out the sell side liquidity. We're looking to enter, hit in our range, we enter, it retraces deeper into this 1 minute fair value gap, and it continues going up and hit our target 1 to 2 risk to reward. So you can see how I enter this in real time. So okay, for the next one, right now the market can do a whole lot of things. Can continues going down to take out the sell side liquidity down here, daily sell side liquidity, or it can goes up, retrace back to the 50% of this range, 1 minute range, go into premium. And as we see, there's a 1 minute clear, 1 minute fair value gap waiting right here too. So yeah, it will be a 50-50, so we won't really participate in it. Market hit that fair value gap and then goes down, create a potential breaker setup, high, higher high, lower low, but we didn't enter because our bias is unclear. The market can easily just touch this fair value gap here, and it just goes back up and retouch the midnight new opening price. It can happen. So it's like a 50-50. If we don't have the bias in place, we will only stay by the sideline. So we mark out the last hour, 3 to 4 p.m., the last trading hour for the New York session. Market goes up again, retouch a fair value gap, break it, and then nearly hit the midnight new opening price, and then continues going down. Kind of just consolidate a bit. Another bearish breaker is forming, high, higher high. Mark out the last bearish candle before you take out the buy side liquidity. Bearish candle, take out the buy side liquidity. Market structure shift. If it retraces back to here, we can enter. But again, we didn't have a bias. The market can easily take out the sell side liquidity and goes up, retouching midnight new opening price. So if we don't have a bias in place, we won't really enter. And last hour, market just kind of consolidate on the daily volume balance level, and that's it. If we take a look at the daily, this is the daily volume balance level. The market just rebounds there and goes back out a bit, wick. So it's a down day. So it's a whole down week with a large range, having nearly 240 handles. If we go to 4 hour, we can see the narrative we had before. We want to see high, higher high, lower low. Here the last bearish 4 hour bearish candle before it starts going out, take out the buy side liquidity. With this candle, this range, the market really just goes back up and touch this range. It also touch this 4 hour fair value gap, and then goes back down. So yeah, so I figure out the bias with multiple time frame and using all the confluences that the ICT teach us: fair value gap, premium discount, manipulation with power free opening time, and then volume balance to figure out my bias, and I enter on it. And I enter on specific time frame, which is from 9:30 to 11, and then 1 to 4 p.m. I only enter on this 2 time range. Otherwise, I will stay by sideline. And another thing is I only enter on breaker pattern right now, so I won't see like 2 minutes setup and I want to jump in and blow my account, something like that. So I will filter out all the noise. And that's it. Thank you guys for watching, and I hope you learned something from this, and I enjoy making these kind of video. Hope you guys have a great one. Keep it up. Yeah, see you in the next video. Peace.